Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Thursday, 26th day of February. A new high for the move in new crop soybeans by a penny. The previous November high had been 1131 and a half. We hit 1132 and a half overnight. We're back to 1131 as I talk. So, you know, we've had a tremendous rally from 1055. I think you should use it. I'm not calling a top. If you sell beans here, go ahead and reown them. You're selling into an 80-cent rally, hold back some money and we own them. I'm not calling a top, but for producers out there, farmers, we're here to make good cash sales, not to be Paul Tudor Jones. So you need to reward this rally, in my opinion. If you can't reward it with a sale, then protect it with a substitute sale. And if you don't know how to do that, give me a call, Robinson Ag Marketing. There are some choices out here. At least protect through the next two USDA reports. We got one on the March 10th. We have one on March 31st. March 31st, planning intentions. We'll know a heck of a lot more about what's going on in the world after that report, after those two reports. And you just want to be caught holding the bag again if you're long beans and, you know, we break a dollar again. Remember that. We just went down to 1055. We did this once before. And people out there that say, oh, don't worry, it won't happen again. Great. Will they pay your bills if they're wrong? That's my question mark. So many people, they spend their whole time pounding their chest like Tarzan. What do they do when they've had an opportunity, didn't take advantage of it? So that's what I try to do. The guys out there that call the highs and lows, um, God bless them. All right, so reward the rally. If you think it's going to continue to go higher, re-own it with calls. I mean, I've got calls on that for pre-owned sales that we already made that I can't believe are in the money, but here they are in the money. So it doesn't make any sense. No, fundamentally, no. Fundamentally, there's a million reasons why beans should be lower, but here we are. The funds are long 160,000, and we are at 22-month highs. If you look at spot beans, right? Um, May beans, we got to within a nickel of the November high. So are we running out of gas? I don't know. Is this like Icarus flying too close to the sun? I don't know. If I had beans in the bin, I would definitely sell it and re-own it because you're getting a great chance here to sell into a nice rally in old crop beans. May beans hit 1172 and a half last night. Again, selling into a rally is not calling a top. If you're long something, right, from 1050 and that's now trading 1170, and you were chewing your nails off down at 1050, and you don't do something to reward the $1.20 rally, then shame on you, right? Because if a month from now we're back down to 1050, I don't want to hear people saying, "Oh, you know, it's the USDA's fault, it's the speculators' fault, it's this fault." No, it's your fault for not doing something to reward it. Okay, that's just my position. So, I'm not calling a top, but boy, if I was long a bunch of beans, and you just picked up $1.20 in spot beans, and you picked up from 1055 to 1132 in new crop beans, 70, 80 cents. Boy, I want to do something with that. All right, so I'm done beating that dead horse. May wheat overnight, Chicago up a penny. July wheat up a penny, 78. It's hanging in there. It's going to have to be a situation where corn and beans can drag us higher. Moving over to corn. Yeah, I mean, these corn is at 467 and three quarters. We hit 68 and a quarter last night. That is a high tick for 2026, believe it or not. We are running into resistance. If you don't know what I'm talking about, you can just, take a look at any chart, or you can sign up for my letter. I do the charts every day. There was a November high back there in new crop corn at 73 and a half. Then there's a high going back to June at 77. So here we are at 67. So we're closing in on it. The fact that beans have rallied $1.20 in spot and corn has only been able to rally, basically from 445 to 465, 20, 25 cents. That bothers me. I would hope that we've gotten some more upside there. We did have a good rally in wheat, which we've tried to use to clean up sales as well. We had, we're at or near a 7-month high. We backed off a little bit. So I'm not calling a top in the rally. I'm saying let's use it. Okay, let's just be clear. All right, moving on to the protein complex. April fats settled at 240.27 yesterday, up a buck 10. March feeders settled at 366.30, up a buck 20. Hogs are back, not only near their contract highs, but they're also starting to get like attention in the social media. So watch that. You've got July hogs at 112. You've got August hogs at 110. You got October hogs out there 90 cents. You can go out and protect 90-cent hogs for how many days is that? My goodness, a long time. So the market's giving you a chance to reach out there. Generally, I don't like to do real long-term hedges, but you can go do something out in October. It's 230 days. A 90-cent put out there is around 4 cents. You can do an 86-cent put for around 3. There are other strategies as well. That's how you do it. You set the floor, you keep the upside open if you're long hogs. And the outside markets, crude oil is lower, down about a buck 18. We've been spinning around this 66, $67 level. If you're not getting my letter, you'll see how important that level is technically. Um, it's the halfway back point of the sell-off we had from 78 bucks down to 55 bucks. And it all comes down to what happens in Iran. If these guys kiss and make up and make nice, we just came out where we had pretty big stockpiles of crude oil sitting around. And again, if this thing doesn't, expand into something negative, I think that anybody that's long crude oil here on a spec uh, position, you might want to make sure that you've got an exit plan. Again, I'm not calling a top. I'm not saying that, if something bad happens out there, next thing you know, we're back up to 78 bucks. We were there before. It could happen very quickly. But we're at a key turning point here, and we're a little bit lower here right now. Out in the silver market, the silver market's been kind of wild. It traded to a high of 90.22 last night. It's trading all the way down to 85 bucks. Very, very technical as well. They shut down trading for a little bit yesterday. If you're trading silver, you've got to expect that during the day, there's a chance that they shut this stuff down, and then you could be left with a position. So be careful with silver. Silver's down 4 bucks right now. All right, so that's it for this Tuesday morning. It's 8:14. We open up in 15 minutes. I will send my letter out today at the end of the close. I like this new program better. I had been sending my letter out for 4 or 5 years in the morning. With the way these markets trade now, the overnight markets, I think, just deserve a morning comment, and I will do my bigger analysis in the afternoon. All right, guys, take care.